Hello and welcome to another Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com, and in this video I'm going to take a look at the concept of buying low, buying near the low of the day on two different stocks, and it just so happens I traded both of these stocks yesterday, and it was a rather ugly day in the market, and I'm looking to buy from the long side. Now, the reason I'm focused on the long side in these particular stocks is because they look good. They're strong. So as you can see, and actually the new day just started, but I started focusing on these stocks after this close. Strong up day in Goldman Sachs, and after this close, strong up day in OIH. Now, you can say what you want about the technical setup of each of these. I'm going to give them an equal weighting. But my objective was to look to buy opening range reversals in both stocks. Now, my area I would look for that would be really nice if I could get would be around 38 in OIH, and for Goldman it would be around in here. Now they both went their different ways, and that's the point of this video. So what I'll also share with you is, and this is important, is that the day that I am looking at trading turned out like this. All right. So here's the SPY on that day, and it was a big red bar that totally broke down. So we're gapping back up, and this is exactly why I'd like to be positioned in good stocks at low prices, even if the market is weak. It's hard to buy the market when it's going down like that, but I can easily buy good stocks. And if you set yourself up the way I was setting myself up, I had two different industries. OIH, right, a ETF on the overall energy sector, and Goldman, one of the strongest financials. Now, I had some other stocks in there as well, but let's just focus on these two. Now, if we focus on how they traded relative to the opening range yesterday, you will see that they both put in opening range lows. Right. So if we look at Goldman, and I'm going to make another video about Goldman because there was a lot of interesting stuff in Goldman's, but I'll send that out over the weekend. So here's your opening range reversal and your confirm right about the area that I wanted it to be. And if we look at OIH over on this side, here's the same day. And here's your opening range, your 30-minute opening range low. Here's your pattern. Didn't quite confirm there, but it definitely confirmed right here. And what I want to point out is that if you look at the bottom of both of these charts, I've got the SPYs. So you can see what the SPYs were doing as these were trading. So the OIH gave you a buy signal or a reversal pattern right near the low of its day while the SPYs were kind of figuring out what they wanted to do, but they're trading below their opening range low. So it was running ahead of the SPYs in terms of breaking out or bouncing off the lows. That's what I like to see. Now, Goldman was initially doing the same thing, kind of following the SPYs, but then it got sucked down when the SPYs really didn't recover. Now, they both, however, take off. I don't know which one is going to take off. All right. Like I said, from a daily chart perspective, they both lined up very nicely for what I wanted. Had the financials been stronger on this particular day and energy been weaker, this could have been the opposite effect. But there's a couple things going on here. First of all, if I'm looking to position for a swing trade, I'm now in low. I've got a really tight stop, right, underneath the low of the day. And the market doesn't look so good at this point. As it turns out, as we now know, the market did not have a good day. And as I'll explain in a future video, Goldman doesn't work out. I wind up getting stopped out, but then get back in, and I'll explain all that in the next video. However, I'm left with OIH, which does rally above the previous day's high, takes out its opening range high, consolidates nicely with a nice opening range breakout pattern of its own, and continues to move higher. So whether I was day trading both of these or swing trading both of these, there were opportunities in both in a negative day in the market. So as a swing trade, full disclosure, I wound up selling some out here, still have half, and I'm in at a great price with a really low risk. So all this is possible, and in fact, a really effective way of putting together the opening range, that first 30 minutes of the day, with the daily charts and the right points to get yourself into swing trades, even when the markets are kind of turbulent. Now, if it turns out that the markets have just put in a low and they're going to rally, I'm probably really well positioned in OAH, as you saw from that daily chart. And I got plenty of opportunities to get back into Goldman or other stocks that look good. All right, so if you're one of the people who have been asking me how you use the opening range for swing trades, here's a really good example of how you do it. It's also a good example of looking at a couple of stocks in different industries, and when the market is really weak, be careful, focus on fewer stocks. When the market's set up really nicely, then you can focus on more stocks. But keep your risk tight, and on balance, you'll come out ahead. And keep your eyes open for the next video, which will include, or a future video, which will include how I traded Goldman, the one that didn't work out so well. Hope that helps. I'll see you in the next video.